If you're a real estate investor, the dates you want to pay attention to is March 15th and 16th. This is the Federal Reserve meeting where they're going to talk about interest rates and what they're going to do with interest rates and mortgage prices. So really important for investors because as interest rates rise, cap rates rise. As cap rates rise, the price of acquisition goes down slightly to be able to accommodate that cap rate. Now, with that being said, if our Federal Reserve right now increases interest rates too much, it could create a mass hysteria and tank the economy. Now, the biggest thing that we're looking for is we're looking for the opportunity for the feds to go in with a little bit softer approach to raising interest rates. And if they do that, I think by the end of the year, I think the war, from my perspective, will start to settle over the course of the next 30 to 60 days. And we'll start seeing the supply chain start loosening up a little bit. And the feds ultimately, by the end of 2022, can start slowly increasing the rates and get back to their ultimate goal of increased interest rates. Now, as investors, understand, interest rates are still at historical lows. In spite of them going up a basis point or even half a basis point to a basis point, we're still at a very, very, very good time to be able to invest in real estate. What you're going to need to watch as an investor is how the feds increase interest rates. And the feds are going to want to be careful as to this as well, because if they increase interest rates too quick, the average American home buyer is going to halt their buying power, and the supply chain, in spite of it being short of the houses that we need, is going to slow even more than what it currently is in spite of the lack of inventory. So I think the feds see what's happening globally. I believe that although we will see an interest rate increase on March 15th or 16th, I believe that it's going to probably be slightly smaller than what we would see otherwise if the war between the Ukraine and Russia was non-existent as it was 3 weeks ago. And so I take a look at the National Association of Home Builders, and one thing that they point out is it says the National Association of Home Builders 2022 price out estimates show that 87.5 million households are not able to afford a medium price new home, and that an additional 117,932 households would be priced out of the new home market if the price goes up by $1,000. So when you're talking about the average median home between $350,000 to $412,000, and you're talking about just $1,000 variance, and you have over 117,000 home buyers that are priced out of the market by a $1,000 variance, tells you that we're pressing the market right now. So when we talk about interest rates rising, we talk about a half basis point or a basis point, we're squeezing potential home buyers. We're pressing them out of the marketing ability to buy new homes, just like the ones right behind me here. And so the National Association of Home Builders also said, for a new home with an estimated median price of $412,506,000, so $412,506 in 2022, and the recent 30-year fixed mortgage rate of 3.5%, a 0.25% point increase in the interest rates would price out approximately 1.1 million households. The majority of mortgage payments will increase as a result of the rising mortgage interest rates, and therefore higher household incomes thresholds would be needed to qualify for mortgage loans. Ladies and gentlemen, I remember, and these statistics haven't changed very much. So what that means, ladies and gentlemen, is that 1.1 million home buyers are priced out of the market. Now, I remember these statistics from when I was doing business in the late 90s and early 2000s, when they told me, Jerome, understand that if the American household income goes down by over $250 on a monthly basis, and they do so for over 3 months, 90 days, that it would put over 60% of the American people into financial distress, because we as Americans, we overspend already. And with inflation happening, we're seeing this at the pump. We're seeing this with natural gas and heating this winter in our homes. We're seeing inflation of raw materials. We're seeing inflation of commodities. When we look at the supply chain and we look at what Russia brings to the table as far as trade, Russia supplies 40% of natural gas and crude oil to Europe. And when you look at the Ukraine and its effect on Europe, they supply close to 70% of commodities of wheat to Europe. So you're going to start seeing increased commodities at the grocery store. You're going to start seeing increased fuel prices in your home, in your car, and you guys have already experienced it. I just went to the gas station this week, and I have a big diesel truck that takes 35 gallons of diesel, and it cost me over $150 to fill up that truck this week. And so as we continue to see the evolution of the war between Ukraine and Russia, we are going to feel it short term. And there will be a long-term effect, but I think over the course of time, as an investor, we're going to slowly start to see this unfold and peel back. Now, for those of you guys who are investing in stock markets, this is the time where equity starts to soften. Most investors start moving their money from equity and stocks into bonds. And so you're going to start seeing a lot of equity plays where people are selling off stocks and equity, and it's going to soften the market temporarily. And you guys have probably already started noticing that on your monthly returns. For those of you guys who have IRAs, stocks, bonds, annuities, you guys have already seen those soften over the last 60 days. Now, with the effect of the war between Russia and Ukraine in the last 30 days, it hasn't helped that any, and we're going to start seeing a lot of people moving their money into the bond market. But for you guys as real estate investors, understand that we still sit in a very precious time in regards to need for housing indoors. There's still a mass need for multifamily, but even more so than multifamily, we're seeing articles now come out where there's a mass need for the older millennials between the ages of 35 and 44 years old, where there's a mass need of single family home rentals. So what investors are looking at is, if I'm going to spend $400,000 on apartments, why not go buy a 1,700, 1,800, 2,000 square foot house at the average median price of $350,000 to $412,000, and at the same price have a conglomerate of single family homes. So you're going to start seeing institutional buyers, investors migrating from even multifamily to single family home purchases over the next few years. Now, how that happens, how quickly that happens, is going to be a direct correlation to how the feds are utilizing interest rates and how they increase the basis points right now to affect how single family home buyers, investors, and end users actually purchase homes. So many people watch the news like Fox News, CNBC, ABC, NBC, CBS for all their news content. And the problem with that is all of those news publications, everything that comes out there is based on ratings. And so I go in and I look for information that actually is statistical, economic information that we can hold to utilize for business services and to be able to depict what's happening economically, no matter what's happening in the world. And one of the biggest things right now that the war between the Ukraine and Russia is going on is figuring out where are we going to be economically. What is the economic effect of what's happening in the Ukraine right now affect us here in the United States and also the rest of the world? So I sat down, and being that we buy land, we build houses, we buy land, we build apartment complexes, we buy land, we build industrial warehouses, I wanted to figure out exactly how we would underwrite projects, where we needed to pivot and move around to make sure that what we're doing economically is not affected by what's happening over in Ukraine right now today. I know a lot of people are sitting back there wondering, is this going to be the evolution of what happens with World War III, and is this the end of mankind in existence, right? So I believe that there's smart enough people in the world that will allow them to do what needs to be done to stabilize what's happening over in the Ukraine and Russia. And we just have to worry about the macro effects of what's going to happen economically right now and the micro effects of what's going to happen to our back pockets immediately. So when we look at material prices, I know that one of the things when you're buying land and building houses, we're seeing appreciated values of land, appreciated values of housing. And so I went to the National Association of Home Builders, and I wanted to go in and I wanted to depict exactly what was happening. So I looked at what was happening between the National Association of Home Builders and what was happening with Fox News, and I compared the two. And I really found some insight and some great information that came directly from the CEO of the National Association of Home Builders, Jerry Howard, and the Chief Economics, Dr. Rob Dietz. And it's great to find people who are actually looking at statistical data. They even go back to 1979, and they're looking at historical data, how the world's been affected in times of war, distress, economic downturns. And so as we look at these times, we sit back and say, okay, what is our options? And when you look at like the global GDP, and you look at Russia and China, those two being the biggest allies, you know, Russia has only a global GDP of 1.7% worldwide. So a very small GDP effect on the whole entire world. We look at NATO and we look at the effects like what's going to happen with the US and Europe and everybody that's involved in NATO. We sit back and say, okay, what can the US do as a standpoint right now to be able to open up opportunities economically? And the good news is as I research and I look at what's happened here with the National Association of Realtors and the conversation between Jerry Howard and Rob Dietz, one thing that they talk about is the fact that we have such a strong economic standpoint in the United States right now. And the United States is really sitting in a really good place if we exercise what we have the opportunity to exercise politically. And so if the Democrats and the Republicans can come and work together cohesively, it will allow for the United States to come out of this extremely strong. We have the Keystone Pipeline that was shut down when Biden came into office. Now, will he go back in and will he open that back up? And will he renege on his decision to be able to shut that down? Now, if we did that, we wouldn't have any global supply issues in regards to fossil fuels, crude oils, and so forth. And what it'll also do for the American people is when the pipeline opens back up, fracking opens back up. When fracking opens back up, there's an opportunity for employment, economic growth, economic stimulation. Not only that, it creates a need for housing because as you move from the Canadian border all the way down south into South Texas, where the Keystone XL pipeline runs through, it creates opportunity through the entire United States, from the northern end all the way down to the southern end, which will increase housing opportunities, employment, so forth and so on. Now, the United States is smart. Through NATO, we have a lot of great allies, so we can start working on new trade agreements, where before trade agreements with Germany for like construction materials was not even something to negotiate or something to even consider. Now that we're having a supply chain issue and we're having an issue with inflation and bringing construction materials into the United States at a reasonable cost, now we have a more open, free trade agreements that we're open-minded to, with the potential of bringing in trades from Germany and being able to bring in raw construction materials to be able to decrease the construction costs of buying land and building houses. So how we exercise this, we have the opportunity to do so. Now, if we implement that, is going to be the other thing. We're always producing continued information on the housing market, how to buy land, build houses, how to invest in commercial real estate, residential real estate. And for more information just like this, I put a link here. There's another video that I want you guys to watch on the process of how we're buying land, building houses, and investing in real estate. Click on the video, and I look forward to seeing you next time.